Hey guys, welcome back to another video. Today we'll be taking a look at Apple. Getting into the overview, the first thing I always take a look at is the company's PE ratio. So currently it's at a 30.72, which is not ideal as you typically want to see this be at or around 20 or less. Now looking to see if they offer any dividends, they currently do. They have a yield of 0.51%, which comes out to about 22 cents per share. Getting into the income statement now, we're going to look at their revenue. So as of the most recent year, they're bringing in 365 billion, which is up almost 100 billion from the last year alone, which is crazy to see. I think going forward, the safe bet is to assume it wouldn't jump as much going into 2022, but I'm sure it will still have a decent increase as they've been very consistent with this. Now, with the net income growth over the past 5 years, it's basically identical to the revenue growth. It's awesome to see that they've almost doubled their net income in the past year. Last thing to look at on the income statement is the shares outstanding. This is something you want to see decrease. The more it goes up, the less your shares are worth. So with Apple, they've been buying back shares at an amazing rate as they've brought it down to 16.7 billion from the 20.87 billion 5 years ago. Moving into the balance sheet now, we're going to take a look at their current assets. So right now they're at 134 billion, which is decent, but it is down about 30 billion from what they had 2 years ago. So I don't really like the lack of consistency with this. Now looking at their current liabilities, they're at 125 billion. It's good to see that they have more current assets than current liabilities, but I don't like how it's only a $10 billion difference. This is definitely not comforting to me. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to be improved on year after year. As you can see, it's looking good. They've managed to grow this every year except the little dip they had in 2019, which is definitely impressive. In conclusion, Apple has some above average financials. Some criticism I want to give is I want to see them widen the gap between their current assets and their current liabilities. I also want to see more consistent asset growth in general, and I don't like the big jump they had in the most recent year in current liabilities. Other than that, I like what I see. When it comes to buying the stock, I would probably hold off until it's in the $150 range as it's a little overvalued at the moment. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I am not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.